In a bold bid to expand India's financial influence, the Reserve Bank of India is pushing the Indian Rupee onto the global stage. The announcement came at the October 1st Monetary Policy Committee meeting, signaling a strategic pivot aimed at deepening the use of the INR in cross-border trade and regional finance. Among the measures unveiled, authorized dealer banks can now lend in INR to non-residents in Bhutan, Nepal, and Sri Lanka. This move allows these countries to borrow in India's currency for trade, reducing reliance on the US dollar. The RBI is also establishing transparent reference rates for key foreign currencies, making INR-based international transactions smoother and more predictable. Additionally, Special Rupee Vostro Accounts have been expanded, now allowing balances to be invested in corporate bonds and commercial papers. Together, these steps aim to boost regional demand for the rupee, offer alternative financing, and reduce dollar dependency. India's trade with Bhutan, Nepal, and Sri Lanka totaled $15 billion in financial year 2025, with Nepal accounting for $8.5 billion, Bhutan $1.5 billion, and Sri Lanka $5 billion. Till now, dollar dominance exposed these countries to volatility, worsened by US tariffs of up to 50% on Indian goods and rupee depreciation of 30% since 2014. By enabling INR lending, the RBI is directly addressing these challenges while advancing its 2022 Rupee Internationalization Framework. Strategically, the move targets multiple goals. First, reducing dollar dependence. INR settlements already cover 20% of eligible trade, with lending potentially adding another 10 to 15%. Second, strengthening regional ties. The SRVA model with Sri Lanka and Bhutan now extends to Nepal, making Himalayan trade more seamless. Economists say the implications could be substantial. For businesses, borrowing in INR lowers cost for imports, such as Nepali hydropower to India, and exports, like Sri Lankan tea, potentially saving 20 to 30% on forex payments. Investors and expatriates benefit too, with stable remittance of $100 billion annually and reduced currency volatility. The RBI expects these reforms could unlock $5 to $10 billion in additional bilateral trade by financial year 2027. Meanwhile, the policy ripple may extend to non-resident Indians, further boosting inflows and cementing the INR's role as a regional anchor, rivaling the Chinese yuan in South Asia. The RBI's move marks a new chapter in India's financial diplomacy. By promoting the rupee as a competitive regional currency, India is not just facilitating trade, it is reshaping the South Asian economic landscape. As cross-border lending in rupees becomes reality, India is setting the stage for the INR to step out of the shadows of the dollar. Could this be the start of a new era where the Indian rupee becomes a regional powerhouse? Bureau Report, India Today Global.